I don't know about you guys, but the market's been doing really good. Therefore, I think we can assume investors are very happy, they're not fearful, they're actually being a little greedy. And yes, that is the truth. The market has been hot and investors are greedy. And the proof I'm going to show you. This article says stock market fear gauge plunges. Investors expect rally to persist in 2025. Now, the fear gauge has dropped to its lowest level since July. The reason for that? The elections are over and the path is now clear. Even with some fear around inflation triggering tariffs and mass deportation that could affect the economy negatively in some areas, investors prefer predictability over uncertainty and are breathing a sigh of relief. And this has resulted in a collapse in volatility. We are now in a very strong part of the year as well. That's the holiday season, and many companies fare very well during this period. Therefore, investors' fears have melted away. Shall I say, the fear snowman has melted and a pile of greed has returned. Now, the S&P 500 has been on a tear recently. And really, we've had 2 great years of market performance, and analysts are expecting 2025 to be strong as well. That would make a third year, which is very rare. Now, earnings have also been very strong overall recently, so these things are also leading to a low amount of fear, and the S&P 500 has hit all-time highs on 56 days in 2024 so far. We can say that the market is pricing in the most optimistic of expectations, placing little regard for potential risk and uncertainty. Even if the S&P 500 has another good year, it may be hard to match the expectations of outperformance. Even Bitcoin has surged 127% over the last year and hit over $100,000 recently. This is another sign of investors' high positive sentiment and low fears. If we break this out by sectors, we can see which sectors have rallied the most in 2024. And no surprise, IT is right there at the top. And this is due to the AI boom. It's affecting all the tech companies, getting investors excited that there will be some huge returns in the future from all of this AI investments. Then we have communication services. I like to think of Netflix. We have financials and consumer discretionary. These all sit above the S&P 500. And then those that have trailed the S&P 500 in performance are industrials, utilities, consumer staples, materials, real estate, energy, and healthcare. Now, I'm going to show you my portfolio at the end, and it definitely reflects this. My technology stocks are booming, and then my real estate stocks are kind of lagging. And it's just something that is proof from my portfolio as well. Now, the main reasons for the positive 2025 outlook, even after 2 stellar years in the market, is due to the new administration's focus on keeping income taxes low, lowering corporate taxes, and loosening up regulations. All great things for the economy to keep going. And as mentioned, there have been strong earnings growth recently, but also the economy has been solid overall, and we are experiencing the lowering of interest rates, which helps stocks go up, up, and up. So what should you do, and what am I doing in this low fear environment? We know that Warren Buffett says, be fearful when others are greedy and greedy when others are fearful. So now that we are seeing greed, we should be a little fearful of those high valuations, but also look at the market for what it is. And that is a market that is still very healthy and one that could continue to provide solid returns. So first off, before I get into more of what we should do and I'm going to do, I am seeing strong performance in my portfolio, as many of you probably are as well in your own portfolios. I'm in the green 36.45%. This is a new high for me. Now turn your attention to Amazon. It's my first stock to be in the green, over 100%. I've more than doubled my money in Amazon. This feels great. I said in one of my last videos that I had confidence Amazon would get to this point in my portfolio, and it has. Now, is this by pure luck? No. It's by me doing continuous analysis on this company and all the companies in my portfolio. You have seen me do multiple videos on every holding in my portfolio, and I share the reasons why I remain bullish on these stocks. This is the power of investing, is selecting high quality stocks, being patient, and trusting in yourself. Not letting emotions and pressures of others persuade you to veer away from your hard work in the analysis you put into choosing these companies. It's easy during times of greed, like right now, to buy at all time highs, have the FOMO attitude, which is fear of missing out, and make those impulsive decisions that could be detrimental to your portfolio, your growth, your future. It's those fearful times where I stayed sturdy in my convictions, and that got me here, where I am today. Not but a few years ago, everyone was saying to sell out of Amazon. But I saw things differently and doubled down. I made videos on it. It has paid off now for me, and I am over 100% in profits in the green with Amazon. So, what am I going to do during this time of greed? Well, I believe you should always buy stocks. You should stay invested. The wrong thing to do would be to sell and pull out in preparation for a crash or a dip that might never happen. But in times like this, where there is a lot of greed, I think it's good to slow down your purchasing and maybe build up a moderate cash position. That way, when the fear does return, you're ready to deploy cash into quality companies at better valuations. Patience is key here. That is so hard for people to do, and I get it, but it does pay off. Now, some investors will get impatient and just buy in without thinking, but you have to determine, you have to set up some buy ranges, right? Where you think your stocks would be at good valuations to buy in. So that is what I'm doing. I'm building up a cash position, but still adding little to this portfolio where I see best fits. I look at my companies and sort them by most overvalued to least overvalued. Right now, they're all overvalued range, and buy those that are least overvalued, or shall I say, add to them slowly. When the fear hits and these stocks or those on my watch list hit in my buying price range, I'm going to buy. I'm going to execute those orders. If they go lower, then great, I will buy more. Now, I talk about quality, right? Buying quality stocks. And a lot of people who are new to my channel might say, what are quality stocks? Well, I created this checklist. And the things that I like to really focus on that tell me this stock, this company is of quality, is if it meets these 5 to 6 bullet points. It doesn't have to be all 6 of these, but as long as it hits 5 of them, then I will highly consider it at least. But if it hits all 6, then to me, that's pretty much a buy. So does this company have solid financials? Do they have growing revenue, growing cash flows? Do they have a strong balance sheet? What does their debt profile look like? You need to look at it all. And then, do they have a good management team? A management team makes all the difference. So get to know the executives, research them. Have they been executives at prior companies, and how did those companies fare during their time that they served? This is a great thing to look at. Then also, does this company have positive brand recognition? Do people see their product or service, their brand, as one that they're happy to have, right? That is staying power, that is growth. And then you look at the products and services themselves. Do these products and services create repeat customers? Do they come in subscriptions, right? When subscriptions are my most favorite thing in the world, because that's dependable, reoccurring revenue, especially if it's a strong subscription, one that people just won't give up. Also, does the product or service create customer dependency? Is their ecosystem sticky? All great things to look at. Then you want to look at the moat of the company. Is it a wide moat? Do they have a strong competitive advantage? Do they have a monopoly or even a duopoly or triopoly? Those I consider as well. And is their business hard to disrupt or replicate? These are all protections of this company that allow you to invest with them with confidence. Then lastly, is the company at a good valuation, right? They might have all these other 5 things, but they might be stupidly expensive or doesn't even make sense because the downside is just too high. But are they historically below an average that they trade at? Maybe their PE ratio, and look at the other metrics. And if it checks all the marks above, plus they're at a good valuation, I think it's a pretty solid bet that if you invest in this quality company, you should see some gains. You should see some appreciation in that stock price. So again, stay invested. Just adjust to these greedy times, but stick to your strategy. So by adjusting, I mean just buy a little less and build up your cash a little more. And I will say this, There's nothing worse than deploying all your cash and then when a dip occurs, having nothing to invest. And on the flip side, it is also not a good feeling to stay on the sidelines and then the market goes up another 20%, which could happen in 2025. That's why I am simply buying less to capture that potential 20% upside. But I'm also building my cash position in case there is a good dip. I have some good buying opportunities. So, my last thoughts are focus on quality, be patient, and do not act on emotions and be impulsive with your hard earned money. And always keep learning and growing. Follow channels like mine, find channels you like, read some books. Just get out there and learn because knowledge is power. And getting started today is what you need to do. Yesterday is gone and tomorrow's too late. You need to start investing. So be sure to subscribe for more content and follow someone who is transparent. I always share my portfolio, I share the good and the bad, and I also treat this channel as an investing family where we all help each other become wealthy. So let me know your current strategy for this greedy market we're in, and do you agree with mine? So that's all for today. Thank you for watching, and we'll see you next week on Mark Arnold's Finance.